Jason here. Today is March 12th, and this is your aftermarket update. So I am pleased to announce that we extended the winning streak to a fifth consecutive day here. We were able to pick up just over, right at 108 ticks on the day. This will make the third consecutive day that we've picked up over 100 ticks on the trading day, which is good. If you remember and go back and read the blog from Tuesday and also from Wednesday, we were expecting some choppy trading conditions. And even though the market did have a fairly significant move to the downside today, it wasn't without its moments of choppy and sideways activity. Most days are, but it had a much more a slower feel to the way that the market moved today specifically. So again, instead of having a eye-popping or jaw-dropping OTG trade of the day, we were taking these smaller moves. Again, using the baseball analogies, we were taking some base hits today, right? We were looking specifically at some trades to get into that would allow us to grab some quick moves and ticks here earlier than maybe we would normally look at. Again, the reason for that, even though we did have a decent move to the downside today, the main reason for that is that, again, I am expecting this to be a little bit bumpy and choppy here this week, and it has been so far. If you just take a look right here at the bottom of this chart, and see if I can I don't know if you can see this or not, but the average daily range for the past 20 days is $2.33. If you take a look at today's range here, we were at 48.79 on the high and down to the low of 46.90. That is 189 ticks. So again, 233 ticks is the average daily range here. We were at 189. So again, the range is tighter and smaller than it has been on average over the past 20 days. So again, we felt a little bit of that here today. And so again, if you go back, I keep pointing you back to the blog from Tuesday and Wednesday of this week, because we did talk about the fact that we were expecting some choppy trading conditions. We had bearish inventory number, but there's been some supply reports that have come out, reports about supply and how that possibly could be providing us with some bullish ideas. So anyway, we talked about that. Go back and read those blogs, and you'll get some more detail on those. But suffice it to say, expecting some choppy trading conditions. So again, instead of having this really big OTG trade of the day, we had a number of small trades. So I'm just going to go back and spend some time just recapping the thought processes as we went through it today, and we'll go from there. Okay, so let's go back here. This is your OTG market maker levels. We did have, right at the pit open, we did have another 70.5 here today. If you recall from yesterday's video, in these choppy markets, slow markets, these 70.5s tend to be very effective. So the short, our sweet spot was 61. We came down to 60, and then really we never came back and challenged this level for the entirety of the day. Once we did get a short here, once we got down through the ETH session open price at 48.44, we had our daily structure mid, which once we closed below that, we were looking for a move down to the signal at 10, and then ultimately the target down there to 80. So we did catch a little bit of the ride here, back and forth. It was a little bit bouncy. You could see once we got in short, we made this, we got in short under the mid, and we made a couple of runs up, and it made it for, again, grabbing a few ticks and then get taken out of break even, grabbing a few ticks, taken out of break even, etc. So again, this is interesting to note as we push down through, we did come down to the daily structure target, and where we ran into a real roadblock, and you'll remember this level from yesterday, was down here right around our market structure signal at 47.50. The reason that was an important level, if you recall from your 60-minute chart, we talked about this yesterday, we did come down into this 70.5 area here, and this was, we hit and never could get below it yesterday, and this was right in yesterday's trading action, and you could see that we spent right around 3 hours in and around this level before it finally gave way and started moving to the downside. So again, we came down here 49, got as low as 30, and then up again as high as 78, and this was all in the span of about 180 minutes in a 3-hour window before we fell apart there. That level did happen to line up today with our market maker level structure signal. And let's expand this chart here a little bit. We'll turn these revisions off, make this a little bit easier to see. And so once you get on your market maker levels, once you get these double bands of support, you can see how they did repel the price several times here before we ultimately made it down below. Again, you had an area where we did look to get short after we were rejected twice here on the three times, 1, 2, 3. We did take a short right up in this area here, and this happened to coincide with a 70.5 up into this area. It got to 75, and that 70.5 was up there at 77. We took a short in that area, and then we rode it down to what ended up being a measured move. So again, we came down into this measured move area here at 34. We had this range that projected target 3 at 34. We came down, we chopped and ranged, and then you had the measured move again down here at 34. And this was an area that we were looking to target off of that miniature 70.5 right here that we did right here. And again, you had the other thing that you had working in your favor is you had this series of reversal bars. These bars change colors and turn orange when you were getting a rollover or you were getting a reversal, especially off of a 70.5. Those are extremely effective. Another reason why we thought this was good, we were in the 9 a.m. to 10 a.m. swing zone, and on average you get a 100-tick move inside that zone. And we went from 48.01 all the way down to the low down there of 48.86. Again, a number of opportunities for you to be able to get short and ride this big move to the downside. Now, we had stopped trading right around this area here. Like I said, I was up 108 ticks, and even though this doesn't look like much, we had a sharp break, and then for really the better part of 2.5 hours, we rode from 94 to 34, just a 60 tick range, hit that target down there, and then again bounced back to the top side. So we quit when we were up 108 ticks, but if you stuck around, the opportunity that it provided for you was right here at this 79 level, and this 79 would have given you the move all the way down to the low. Now, how would you have known that that was going to be the low on the day? Well, one of the things that we do look at in the oil trading group here is the 1.27% range extension, and that is a measurement that we use to determine potential targeting areas down below, and of course 46.87, and we got down to 46.86 for the low. So that's the target you would have been looking for. That's one way you would have known a target that you would have been looking for. The second way, or the second target that you would have been looking to use here, we're going to come back and put these fib levels on here. And this was the retracement from that swing high to low. And so when we are looking at those, we begin to look at our OTG AB equals CD tool. You grab this swing high and you take it to this swing point here, and the 100% retracement was here at the 09. But again, knowing we had that 1.27% range extension on the previous chart down here at 87, you know that we could have reached. But it's interesting to see how we did come down to that level, and then we rotated around the 100% measurement. Again, another measured move from this leg to this leg. So again, that's how you would know the targets that you were looking for down below if you were trading that particular move. One final way that you would have been looking to target down at that area is when you expand these charts out and you look here, we'll add back the revision signals here, and you can see that we had a revision signal target. So when you get a close, you come down, close below, come back up, close below, and come back into the revision signal. Then that gives you the revision target down there at 91. So this is the way you would have been looking to target that particular move to the downside. So even though this does look like a very long move, keep in mind that our average daily range right now on crude for the last 20 days is $2.33 or 233 ticks, and today's range from high to low was 189. Again, we talked about this yesterday, 89 and 33. That's 44 ticks of range that was not in today's market that has been there on average. That makes a big difference as the market is more aggressively moving, right? That makes a big difference for what you would normally look at. From a volume perspective today, just really quickly here at a glance, these white candles represent average volume for the period. These candles that are above represent above average volume. Everything that doesn't fill in here all the way back into the morning, all these candles that aren't filled in here represents below average volume for that period. So overall, we were below average on volume today relative to what we expect, and this is a 21-day average volume. That lines up with the fact that our average daily range was also lower. So again, coupling all of those factors together, bringing all of those factors together into our trading decisions today allowed us to take smaller targets, be a bit more conservative. We were very patient today, and again, it paid off in the form of a 5-day winning streak and another day where we cleared out with over 100 ticks on the day. So again, that pretty much sums up what we did today. We'll be looking to get back at it again tomorrow. As always, I want to say thank you for spending the time watching, listening, and partaking in the material that we provide here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trading.